Arvind Chari, head of fixed income and at Quantum Advisors. He's joining us on the phone line. Arvind, thanks very much for taking out the time. More than the currency, actually, it's the bond yields, that deserve attention at this point. 6.39. Last few days, we've seen them come off. Do you feel that now, the questions with regards to whether or not they have enough fiscal headroom get sorted with the RBI payout to them?
Yes, good morning. So the payout was more than what the market anticipated, both the dividend as well as the excess capital of 50,000 crores that has gone through. And if you see the bond market and the way yields have moved, the major worry for the bond markets, which is reflected in the steeper term premiums, has been the risk on fiscal, whether revenues are running lower than the projection. And in the backdrop of the narrative of the economic slowdown, there's genuine worries that whether the government will do a fiscal stimulus package. So nothing got announced majorly on Friday when Nirmala Sitharaman announced her packages. That was a comforting factor. And today, with yesterday's news of excess money, fiscal pressures definitely have eased, which is a positive for bond market. And you're seeing that getting reflected in the market right now, about 7-8 basis points lower than what it closed yesterday.
Right. The other question obviously is, do we see these yields coming off further in anticipation of a rate cut in October as well?
So as I mentioned when I was at your studios last time also, there is monetary policy headroom. The inflation targets have remained well below the RBI's target. And also, I think the RBI's projections of growth are higher than what the market is estimating. So, and if you see the commentary during the policy and after the policy by the RBI governor, they are well and truly growth focused. So there is monetary policy headroom. The risk will remain on fiscal. So there was some comment yesterday that whether the government will use this extra money to fund a stimulus package. So I think they should avoid that, because anyway the fiscal situation this year is already running lower than what they projected. So if they do not announce any fiscal stimulus, then you should expect some more rate cuts to come through, and you should then expect bond yields to also go lower.
Yeah, but nonetheless, there are many that believe that this money is primarily going to be used to fill the gap of the revenue shortfall. Nonetheless, the other angle, and the last question from my end, Arvind, remains how this money is actually going to get transferred. Because I was hearing some conversations, and a few things pointed out is that the RBI is not sitting on cash. And they're not going to be able to just remove the cash and give it to the government. They're most probably holding government bonds, and the transaction would have to be done through that, and it would probably have to be done in a staggered fashion. Then what happens to bond yields?
No, if you see how they pay dividend, so that is the 96,000 crores that was announced, right? The annual dividend, which is paid at one shot. And if you see the RBI's balance sheet, they earn substantial amount of interest income from the forex reserves that they own, right now about $430 billion. And they also get interest on the government bonds that they own as the government keeps paying interest. So they do generate income enough for them to be able to pay a one-shot dividend, which is a normal practice. There's nothing new about it. The other aspect of the 52,000 crores of excess capital, that one may argue that that is not lying in cash, and that is already invested because it is part of the contingency reserve. And one would have to see how they sort of liquidate that asset, or maybe they would have already created that buffer, knowing that they have to transfer, but they were taken in their income statements, or they will have to do over a period of time they can do the transfer. But these are procedural matters. I think given the size of the RBI balance sheet, these amounts are fairly minuscule in that sense.